Hey everyone, today is Wednesday, July 15th, 2020. Right now it's 7:11 p.m. Eastern Time and the market has closed. So let's take a look at the market right now. So we're looking at the S&P E-mini. Let me just get rid of all these drawings. You can see that the market is really trying to break above, this peak that we made on June 8th throughout June 9th. And so far, it's just consolidating here, right? And it is pretty difficult right now for the market to break above it for some reason. I mean, we're only a few points away. Like yesterday, this morning, we broke above it, but because of the vaccine news, the tests were successful by, Moderna. I had a special episode yesterday talking about the vaccine and its implications on the market, and I really recommend you to go watch it. And today it opened up and came down, just oscillates around this level. It seems that it's pretty difficult to get back above it for some reason. And this is pretty common behavior in some of the key points for, S&P. For example, here we also had a lot of attempts to break above this particular level, and September 2019, and the market consolidates basically flat until it came down, looked for new buyers, then had the energy to push up, right? So when a particular level in the S&P is breached, usually the move is pretty swift, right? Usually the market usually zoom through it, and the very fact that right now it is kind of just consolidated on that particular level, which doesn't really make any particular sense. Just shows me that this level could be a potential resistance. Although I don't really look for resistance and support, because I think these resistances. The concept of resistance is very, very psychological, and because there are so many derivative products in this market, and there are so many different indices in this market. For example, right now we do see a line of resistance at this level. We assume there is one, but if you look at the Nasdaq doesn't have one, right? And Nasdaq, it looks completely different. The chart looks completely different. You look at Dow Jones. The chart also looks completely different because they just have different compositions, different companies in that index. So sometimes, for example, these kind of resistance is kind of touchy resistance being rejected by this level. It could be just pure coincidence due to the price action. Okay, and we shouldn't really read too much into it. But the very fact that right now is kind of consolidating this level, it just shows me the market is hesitate to break up further. I think the reason is, the major participants, first of all, the first reason is the Nasdaq right now has diverged, right? You can see the Nasdaq for the last 2 days, since July 13th, which is 2 days ago. For the last 2 days, Nasdaq has been underperforming everything else, has been underperforming S&P, has been underperforming the Dow Jones. And Nasdaq so far has been outperforming since actually early February, and we are actually seeing a behavior change in the Nasdaq index in terms of performance over the last 2 days, which is a very rare, considering how well it has done for the last 3 or 4 months. And right now, I think the Nasdaq right now is probably going for a deeper pullback, and because the Nasdaq is, has a lot of companies inside Nasdaq, it is also in the S&P, and which is also overweighted, right? Like the S&P, I think 25% or 30% S&P 500 are technology companies from Nasdaq. So these two indexes, they overlaps. So if the Nasdaq is going for a correction, a much deeper pullback, then this thing is gonna follow, right? That's just how it works. So this might be a, but the thing is, if you look at the past price action, it could consolidate here for next couple of days, and we're gonna see maybe more consolidation around this level. So right now I haven't really done anything. I want to see more consolidation before taking a position. Okay, before making the trade. So I haven't really done anything today. So let's take a look at other stuff. What can we take a look? So if you look at all the leading stocks in this bull market, the Tesla, the NIO, they are all kind of down right now. I don't think they are going to go up again. In the meantime, they probably have to consolidate flat like this and maybe try for another run. Or maybe that was interim top, right? It's hard to tell. It's hard to tell. Take a look at the cryptocurrency market, the Bitcoin right now. Let's see. Bitcoin right now has an extremely low volatility. Extreme low volatility at this point. You can see that here is basically a flat, and let me see what's the volatility here. It's like the 6% volatility from the lowest points to the highest points. So the actual volatility probably only 4 or 5%. And right now for the last couple of days, you can see the volatility is about 2%, which essentially has none. And there's a huge volatility contraction. You can see that here, indicated by pretty much by a triangle, right? If you look at this. This is just, forget about the patterns. This is just a volatility contraction. You can see the price is getting, the range is getting smaller and smaller. I think it's going to make a move. Particularly, I think the move could be going for the downside, in my opinion. A lot of people on TradingView right now, if you look at the Bitcoin section, there's a lot of people are saying that this is going to result in an upside move. I just don't think that's going to be the case, because just based on this behavior, if this thing going for the upside move right here, I would think it would have happened a lot sooner. I think right now it just is in equilibrium, and when there are just not enough buyers right here willing to push the price up further. I think what's gonna happen is, again, I've been saying that for the last 2 weeks, it's probably gonna go down. As you guys know, that the cryptocurrency market doesn't have gaps, right? It's 24/7 market, but you can pretend these are gaps, right? These fast price move from one particular level to the next level, leaving a gap, leaving a price vacuum in between. And these are also gaps. You can see that here. This one is also a gap. So usually in any of the commodities market, stock market, the gaps usually gets filled, which means when the gap happens, the price usually goes back and retests the beginning of the gap. You can see that here the gap happens, then the price bounce back, tests beginning of the gap, this level, then price came down again to fill the gap. That's what it means by filling the gap in a lot of markets. That's one of the kind of the nature of the market, how the market works, and you can see that we have a whole bunch of gaps. For example, like this one, this gap was left very early on and hasn't been filled until very recently, right? Until let me turn up the volume. You can see that even this one got filled. A lot of people saying that this might not be filled, but it turns out eventually got filled. And that was the gap that hasn't gotten filled. And see that? So I think that this particular gap could be getting filled very soon, and the price is going to come down, fill the gap, and maybe consolidate at this particular level, then attract more buyers. That's where the buyers could come in, because the market, the price has gone lower, then they can, maybe move this particular move Bitcoin higher. Yeah. And what else? Let's see. Really, I don't really see a lot of opportunity these days. So today I was looking at Canada Goose. This is one stock I used to own. I used to short it. Actually, I shorted when it broke down below here, and I used my option. This has made me about four times, so 5 times in my position, because I was shorting with options. And this particular crash during the coronavirus, COVID crash, has made me a lot of money on this stock. So right now you can see that the Canada Goose is outperforming all the other stocks because it's a retail, but it's a high fashion, luxury brand, premium brand stock, right? So their profit margin is quite healthy. And you can see that today a lot of these stocks are getting pumped. That's because the logic behind the market is that the vaccine is working, and the retail stores, the malls, everything could be reopened. The economy could be opening back up, which benefits these kind of companies, right? For example, today Air Canada, let's see, Air Canada is up quite a lot as well, right? So today, these kind of stocks, the Dow, the components in the Dow, they are outperforming. They're outperforming the other stocks. And I don't think this is gonna last very long, though. I mean, maybe this thing is gonna outperform for a couple of days. Then it's going to do something like this again to roll over again and bring the entire market down. So right now, what my observation is that we are having a sector rotation, and this rotation is going from technology sector, and some money is being flowed into some of the traditional sectors like retails, travels and transportation, clothing, stuff like that, right? The other company I used to own, let's see, Tapestry today. Yeah, so you can see all these Tapestry is basically the parent company for Coach. Let's take a look at Nike. Maybe Nike's also up. Yeah, Nike's also up a little bit. Not a lot. Under Armour is more volatile. So yeah, that's what I expect. So I think you see that Under Armour went up a lot. So all these companies in that particular sector today have gone up, right? And so maybe for the next couple of days is interesting if we can buy these companies like Under Armour, Canada Goose, Nike. Maybe they could outperform in the next couple of days. I think that could be a good trade idea for the short term, though, that is. Because these companies, I think in the long term, especially for travel and transportation companies like United Airlines, I think the economy was still going to spell a lot of trouble for these companies, because watch my last video about the vaccine, this implementation on the market. The earliest date we can get a vaccine will be next August, assuming everything went perfectly. And because United States has failed to flatten the curve, so that means the vaccine is essentially kind of useless for the United States, but the vaccine is going to be useful for the rest of the world. So if you're saying that by August we're going to have vaccine, we're going to distribute to the entire world, and this virus is probably going to die off by the end of next year. And the thing is about the Spanish flu lasted about 2 to 3 years. And it seems that this timeline is kind of similar to the Spanish flu in the past. So these companies, I think we're still going to have a lot of opportunities in these companies to buy them at much lower price. And I mean, it only consolidated for this long, right? If you look at this kind of consolidation, they they really last for years, and we might see another bigger move once this thing, do a flat consolidation and might even drop even lower. So if you are willing to, you're thinking about investing in long term for these Dow component companies like airlines, heavy industries, all that stuff, maybe you should wait for a little bit. But for the short term, it could be a good trading opportunities to buy these companies in the short term. Okay, so that's all I want to talk about, and hope you guys enjoy your night, and see you tomorrow.